Hello, everyone. So, some pretty amazing action going on in gold here. Well, I guess if you've been looking at charts as long as I have, might be amazing, but it's not unexpected. So, let's just look at a couple things. First of all, notice how back in August of 2020, it ran into resistance right around $2,085 an ounce. Then in March of 22, it ran into resistance at the same price level. Then again in May of 23, same price level. I'm talking to within a couple dollars. All right. $2,000 security trades within a couple dollars at a couple different years apart from each other. If you think about how big the gold market is, all these things have to come together to manifest themselves to make these levels form. But here's the deal. See, there are people that bought back here that regret doing so because right after the price falls. So they tell themselves, if this ever gets up to my price level again, I'm going to try to sell and get out at break even. So you get remorseful buyers who bought up here trying to get out over here. If there's enough sell orders, the level that was resistance becomes resistance again. Same thing happens here. People bought up here, they get underwater. They say, if it ever gets back up to my price level, I'm going to sell and get out at break even. So there's resistance there. So you get resistance at former peaks because of buyer's remorse. There's a reason for it. There's a if there's a reason why there's resistance at former peaks, and it's because of trader psychology. Now look what's happened over the last couple days here. We got it back up to this level. Looked like we were going to go through it, but we had this huge reversal. This is what we could call a reversal day or a bearish engulfing pattern. When markets are going up, you could say the bull's in charge, and when markets are going down, you say the bears are in charge, right? So a reversal pattern shows a change in this leadership. It could be a long-term change. It happens over a long period that's very slow. We would call that a rounded top or a rounded bottom. That's how that would appear on a chart. If it's maybe a really quick move that takes place over a couple days, like down here, we could call this a V bottom. Sometimes the change of leaderships takes place in one day, and I think that's what happened yesterday. If you were watching this, you would have thought, all right, the blue team is winning, pushing the ball up the field here. On this morning, got all the way up to there. And then by the close, it was all the way back to there. So it's almost like they got here, the red team made the goal line stand, and the momentum changes and they start pushing it back down the other way. So this is buyer's remorse. We can also see buyer's remorse to other things. It can turn support into resistance. People bought down here, then the price goes lower, and a lot of them say, if it gets back to my level, I'm going to sell and get out. So what was support becomes resistance. Buyer's remorse. Back here, what was support becomes resistance. Buyer's remorse. So my guess is that this is going to go lower, but here's the thing, right? The reason why we see these chart patterns in different things, we see the same patterns in stocks or cryptos or our currencies or commodities, is because what we look at when we're looking at a chart is the psychology of the people that are trading them. This is a psychological thing. There's a reason why there was resistance here. It's because it was a support level. There's a reason why there is resistance here. It's because it was a resistance level before. In the market, some price levels are more important than others. And sometimes they can stay intact for a long time, like this resistance level up here around 2085, which has been resistance now for, 3.5 years. So that can keep, so investor psychology can keep resistance intact. Now look at this. We can also see down here a support level. How is it that you would get support at a former support level? Well, this is not because of buyer's remorse. This is because of seller's remorse. There's people who sold here that regret selling when the price went higher, and they say, if it ever gets back to my price, I'm going to buy it back. Now, next question. Why would we sell off of resistance? Why do we get to resistance and not just stay there? Why do we sell off? This is because there are traders who want to sell. That's what resistance is. And they notice the market has stopped moving higher. Markets move higher if there's not enough supply or sell orders. If it stops moving higher, you can kind of make the assumption, all right, there's new sellers coming into the market. So some of these traders get nervous that they're going to miss out and they start to undercut each other and it starts a snowball effect. Opposite is true when we get to support. There are traders who want to buy and they notice that the market has stopped going lower and markets go lower if there's not enough demand or buyers. And they start to think, oh, all right, there must be new buyers coming into the market. I better increase the price I'm willing to pay or else the sellers will go to someone else. Just like up here, they're like, I better reduce the price I'm willing to sell at, or else the buyers will go to someone else. So you get these snowball effects. So you tend to sell off of resistance, you tend to rally off of support. All right, just remember, everybody, when you look at a chart, you got to look at it through the viewpoint of what does this tell me about trader psychology. And if you don't do that, in my opinion, you'll probably never be able to get a good understanding of chart reading. All right, thanks everybody. I will see you soon.